I tell you what, everybody, real estate just got that much more interesting. I've been looking over this tax policy all morning, and I am very neutral politics. I don't do the politics. I believe you got to learn how to make money in any situation, in any political environment, and tax strategy happens to be the biggest one. And a lot of people have been asking me, what's going on? What's going to happen with this new policy? I'm going to talk about it in this video, and it's going to be crazy. See, I believe the rules of money are changing. Taxes are definitely changing. Investing and the way we look at it is changing by the day, and the virus has sped it all up with the quick light. Things in the next 5 or 10 years are going to be totally different than they were in the previous 5 to 10, 20, 30 years, and we got to prepare for it. And we got to think ahead. My mind has been exploding all morning. People have been calling me saying, Jack, what's going on? So here's what's going to happen. And I'm going to break this down. The 1031 exchange just got gutted. Capital gains going through the roof. Things are changing. And the big boys are going to start buying single family housing like it's cheap hot dogs at the ballpark. Like it's buy two, get one free at Publix. Let me tell you. I've been seeing this firsthand here in Pensacola. Like this is happening. Okay, so you got to divide the economy up of real estate into like 4 places, okay? You got the big boys. You got the families that are creating wealth and got a couple of $1 million, you know, or so in real estate. You got the single family people, and then you got the international clientele, which I happened to work with some a few weeks ago. And that was very interesting. Okay, the first one, the big boys. We're talking BlackRock. We're talking about the big investment companies, right? The ones that would own the 32 units, 100 units, 200 units, 1,000 unit apartment complexes, okay? Those are the big boys. And in this new capital gains, well, really 1031 exchange, capital gains change in the infrastructure bill, what's happening is they're going to limit the amount of 1031 exchange savings you can get when you trade up the properties to $500,000. And I'm guessing that's per transaction. So like let's say you bought, you live in California and you bought a house for $250,000 and it's now worth $1 million. Okay, we're just breaking it down Barney style. It's worth $1 million, and you got to sell that property. You used to could take that money, roll it into a 1031 exchange, buy a like-kind property that's a little bigger. You could take that squeeze, the money you were going to make, throw it into that bigger property, and not have to pay taxes, right? So just a quick drawdown on that, and it allowed you to go to a bigger cash flowing property without getting hit by the government. Okay, and the government wants you to create housing for people because the government doesn't create housing, so they provide incentives like 1031 exchange and passive income deductions and things like that for investors to risk their capital. Because if you make somebody risk 100% of their capital and they only get less than 50% back after risking their capital, they're going to go on and find other things to invest in that don't have a risk, because with real estate, there's a lot of risk. You get sued, it could burn down, you could a lot of things can happen. So if you don't allow them to keep the squeeze, they're not going to do it, okay? And just for me, I've been selling off my properties because between COVID and new laws and taxes, it's just not been worth holding the properties for me. So I've been selling them off until I figure out what's going to happen. And that's what the big boys are going to do. They're going to cycle out of the big properties, and here it comes, okay? Here it comes. They're going to cycle out of the big properties, and they're going to go into the residential, condo, vacation rentals, Airbnbs, and they're going to zap up everything across the market you could possibly find if you're a single family person, okay? And that's the other guy. The single family guy just wanted a house for his family, and he's out in the market, and he's looking across the board, and he said, I just need a house for $200,000, $150,000 for my family to live in. Well, I've been looking all morning, okay, here in Pensacola, and I got clients that have come from other parts of the country here to Pensacola to buy a house for their family, and there's nothing. Absolutely nothing. I forgot what the number was as far as inventory in Northwest Florida. It's like 800 listings or something like that. And there's 3,000 realtors trying to sell them, and there's all these people moving here. And that's just that's pretty much just a figure of speech. Those numbers are it's nuts. So when we're looking at the market and you've got those guys, the big three, the big boys, you got the investors, which are, mom and pop investors investing for retirement, getting rental checks. And then you got the single family guy out there trying to buy a property. And then now you've got this whole new wave of people from the international world coming here. You know, love the guys. They do great business, but they're starting to buy up the houses that'll Airbnb to put their capital in the United States. You know, it's a great venture for them. They're doing that to better their family and their situation, because overseas you've got a lot of political uncertainty, currency uncertainty, and the United States is the safest place for them to put that money. So, like, thinking about that, my mind is exploding that now all of a sudden there's no inventory on the market. And if you were trying to incentivize like cheaper housing for people, you just crushed the ability for apartments and large scale multifamilies to be built and maintained, people to commit capital to it. Once the government injects itself into policies in real estate, the smart guys with money just run circles around it, okay? And they got all the tax guys, and they got all the advice you possibly can. And they'll just find the ways to get around the rule. So if you limit the 1031 exchange, you got to get rid of it completely, 100%. I agree with Kevin on his video where he said that, because now you have skewed the board to where the guys are gonna be like, man, I don't need to be over there holding a $10 million piece of property. Let's refi this thing. And let's go take that money and throw it down into the little leagues and single family housing. And we'll just do it that way. And we'll be able to 1031 these things individually, because they're going to own them in a bunch of different limited liability companies. They're going to take their squeeze and they're going to move on to the next deal. Problem solved. That's what I would do. And it's just like, I feel like when we see the stuff on the news and they're saying, oh, taxes for those making under $400,000 are not going to change. Let me tell you, other things are going to change, okay? Like housing. Like, you might not get taxed more, but now all of a sudden housing is going through the roof. You're getting hit on inflation. It's coming. Because I made the video when this whole thing happened a year ago talking about they're going to come with taxes. They're going to raise your taxes. And they have. And it's not just the Republicans. It's not just the Democrats. Everybody was really bad with money, thrown into the wind. And I think, 21% of all the money in America has been printed this last year? Okay? And that's what these real estate prices are doing. They got to circulate the debt. Once they print more dollars, they got to circulate more debt to back those dollars. And I feel like I'm the only one, and a couple other guys on the internet are actually saying this stuff. But, I want everybody to be positive, but know what is going on. This is what happened. So if you want to solve housing, okay, let me just say, if you want to solve housing, get rid of all the crazy zoning laws, streamline the process for building properties, give investors incentives to come in and build subdivisions and build out apartment complexes. Don't limit it with 1031 exchanges. Get rid of the capital gains on flippers, or make it something okay, like 15%. Well, they'll roll into these bad neighborhoods, they'll flip these properties, and they'll put them up for sale, giving somebody a good place to live, to either buy or rent, and you'll have these problems solved pretty quick. But right now, COVID has slaughtered the supply for plywood, 2x4s, PVC pipe, electrical outlets, electrical cord, everything is through the roof. And you got to solve that. And you got to solve these structural problems and these like, it takes almost 6 months just to get the permitting process done. The government is so slow doing the permits and the inspections and all these things it takes to build housing that you will not solve this problem in the next 20 years. These are just my thoughts on this, and I just wanted to put this out there. Maybe this resonates with somebody, maybe it doesn't. Maybe this helps you if you're a real estate investor. Think about these things, because these have got to go in your kit bag, because I know a lot of guys, a lot of buddies out there are multifamily syndicators and real estate investors, trailer parks, things like that. But now that capital gains has changed and the gains change. I said a long time ago, the money line has changed. The rules of money has changed, and we've got to think differently on how we're doing this. And those are my thoughts. Hope this helped. Comment down below if this helped. If you're looking to buy or sell real estate in Florida, let me know, because I'm a real estate agent and I can help you with that. Just hit the email down below, shoot me a message. Comment also if whatever you think about this. Think I'm right, think I'm wrong, whatever. At least I'm putting my opinion out there. I'll see you guys in the next video. See you later.